Now, in an economy where every shilling matters, as we speak, we're looking at a debt of 9.2 trillion against a GDP of 13 trillion. Even as we talk about that, we are mulling over borrowing a bit more, going by what we have today and what we've covered, is that 270 billion is perhaps what we might just be getting in terms of Eurobond in the next financial year. What does this portend for you and I as a Kenyan looking at this increased debts? Should we perhaps just stop all this altogether and live within our means, perhaps just consume what you can be able to manage? This and so much more as far as our economy is concerned. Taxation, financing, budgeting and cost of living forms center of our discussion for the next 40 minutes. For the same, I have created FaceTime with Dr. Kamau, who has an array of experience in the issues that we're about to discuss, but also just describing him as a business consultant. Daktari, karibu sana to the program.
Thank you very much, Doreen.
And thank you so much for your time.
You're welcome.
Now, let me just broach this discussion from where we are as far as debt is concerned.
Yes.
This debt has been increasing over time since 2020.
Yes.
We were at 6.6 trillion in 2020,
Yes.
7.7 in 2021, 8.6 in 2022.
Yes.
Now we are looking at 9.2 trillion, that is our debt, against a debt ceiling of 10 trillion.
Yes.
Whilst some quarters would say that you really can't quite do much if you don't borrow. And we oftentimes like to juxtapose this or compare with developed countries that they too borrow.
Yes.
But from where you sit with your wide experience, what really has gotten us to this point? What would you attribute this continuous increase of debt for the past 3 years to?
Thank you very much, Doreen, and much appreciation for hosting me this morning. The reason why we are borrowing is because there are two strategies to managing a debt. There's a debt restructuring and debt refinancing. So basically what we are doing is debt refinancing, because you will see that we are borrowing a loan to repay an existing loan.
Exactly.
Now the problem that we are having, as opposed to when we were borrowing in previous years, we are borrowing at a more, that time we were borrowing at a more favorable interest rates, because the credit rating of Kenya as a country was favorable. Remember, by the time the previous government was taking over, even the IMF and the Bretton Woods institutions, they were looking for the Kenyan president to come and borrow. But right now, the current president is being chased to go and repay the loans.
That which you borrow, now go pay it.
Yes, go and pay it. So that time we were receiving loans at a very favorable interest rates. Right now, when we are refinancing, we are doing that at a very exponential and punitive interest rates. So it is not a very good situation that we find ourselves in, that we are borrowing to repay an existing loan. It's like digging another hole so that you can get some soil to fill an existing hole.
More like borrowing from Peter to pay Paul?
Yes, borrowing from Peter to pay Paul, but this time around at a very high interest rate.
All right, I hear you.
Yes, yes.
So now when you say that and you just look at what we've actually what is making headlines of the dailies today, that in the next financial year we're looking at perhaps getting another Eurobond.
Yes.
270 billion, which is for a loan that will mature next year in June. And looking at the current situation that we are in right now. So then one would ask, why would we be thinking about getting another loan, whereas we have other loans that you're paying? Because whatever we are even paying right now in April, and perhaps it's also going to be maturing in September, is basically the Eurobond that we got in 2014. Almost 8 years later. Then do we need to just stay within the confines of what we can afford as a country, as opposed to just continuing to pick and borrow from almost everywhere?
Right now we don't have a choice, but
we don't have a choice but just to borrow.
We just have to borrow. We just have to borrow, because if we delay borrowing and we say we borrow when the worst has come, that time we will borrow even at higher interest rates. Because what would mean is if when we are supposed to repay the loan, we don't have the capacity to do so, and we default on paying that sovereign loan, then it will be very catastrophic to the image and the perception of the foreigners that have on Kenya. And we will continue having a weakening credit rating as a country. So this time around, the credit rating for Kenya, it is not as good, but it can get worse. So it's better we borrow at this rate, at this time, because if we continue to wait and the situation is not getting better, then we might get it rough at that time. It's like even the issue
quite
that...
interesting that you're saying it's actually okay for us to continue borrowing, because if we don't,
yes,
we might just be getting in the red already.
Yes, for sure. It's like what the president said, that he doesn't want to borrow to pay salaries. But now the president probably would borrow at a rate of 10% if he were to borrow. Yeah. But that person who has not been paid, that Wanjiku, is going to the bank or even to the Shylock to borrow at a very high interest rates, probably even 20%, 30%. Some Shylock, they lend at an annual rate of even 100%. Yeah. So it would even be better if now the country can borrow at a higher, at a lower interest rates, maybe 10% as a country, as opposed to the government not borrowing and allowing Wanjiku to go and borrow. Because if you have not been paid your salary, you will have to look for money.
I hear you, but again, just I'm really having tough time and conflicts in my head with this, because if you're saying that indeed we just have to borrow because if we don't do now, in the later years, we'll just be forced to, and at a higher interest. IMF has already classified Kenya from a debt risk to a high risk when it comes to debt. And here you're saying that we need to just borrow nonetheless. What does this portend?
Because we are already in a very precarious situation. So if we had not started to borrow, then we would say let us not borrow. But already
we already begun.
We are already into it. And we have loans that are becoming, there are loans that we are supposed to pay, as you have said, by June next year. We are supposed to pay a Eurobond of 250 billion. So if we don't have money by then and we default, what I'm trying to avoid is the issue of defaulting. Because when you default...
The Zambia-Ghana way?
The Zambia-Ghana way. Because when you default, it's like now you get barred from and banned from accessing international markets. So right now we have access to international market. Let's borrow so that we don't slip to those dangerous zones. Because when you default, we slip to dangerous zones and will not be able to...
We can't get access to international markets, as you're saying. But I mean, again, one would argue, Daktari, that these things are planned and budgeted for. For instance, when you took the Eurobond in 2014, we knew it would mature at this point in time. It's 8-9 years later. We knew very well. Now, just a few weeks back, in the beginning of this month, the Deputy President did say that they are conflicted as a government between paying that debt and paying of salaries. And since we got independence for the past 60 years, this is the first time we've had in national government where civil service is actually complaining of delayed payments. Of course, we'll come to county governments. That has been a ripple story over time. We'll come to that in a short while. But yes, he did say that they're even in a difficult time. Yet we plan for this. We know that at this point, it will mature. We need to pay for it. So then if we are borrowing for that, and it gets to that point and you're conflicted, does it mean that we're not planning well? Or is it that we're collecting less as a country? Just what is the dynamics? What goes into this? Because, I mean, a classical example is like, when you borrow from an institution X, you know that in the next 6 years, it's going to mature. You pay slowly.
You pay slowly.
So what is this?
Actually, when the Deputy President says that we are conflicted between paying salaries and paying the debt, I think it is not very much in order because we don't have a choice about which one comes first. Always the debt has to come first. The first charge to the consolidated fund account is the debts. Actually, when we are signing those contracts about Eurobond or even Treasury bond, is the condition is that you will pay us as the first that's
the first priority.
That's the first priority. So the salaries come second. So there is no way salary can come first. before our debts. So when now the Deputy President we says that we are having that challenge, it is for sure, and there's a problem because the government should have practiced more prudent financial management because as you are saying, it is a debt that we knew it would mature at that particular time. For instance, in March this year, we paid a loan of about 150 billion. And you know, when we were passing the budget for last year, that cost of repaying the loan was captured there. was factored in there. We did a budget of 3.3 trillion. Out of that budget of 3.3 trillion, 2.2 trillion was for recurrent expenditure. And this recurrent expenditure includes the payment of salaries, repairs and maintenance, buying of office supplies and paying for other services, and also repayment of the debt. Servicing of the debt is included.
So it was factored in.
It was factored in.
We knew that's going to feature in there.
We knew that was going to, the debt was to be paid at some point.
Yes.
So the 2.2 trillion was there.
Yeah.
Even the money that we have not been able to send to the county government, we had budgeted for 400 billion. 400 billion was to be sent to the county government. Because out of the 3.3 trillion, 2.2 was recurrent expenditure.
Is it 400 or 370 billion?
407, actually. 407.
Is it 407 or 370? You're talking about the previous financial year?
The previous financial year. Sometimes maybe it depends when you obtain the figures, but perhaps they might change according maybe to the interest rates or the exchange rates. But according to the budget, 3.3 trillion. 2.2 was for recurrent expenditure. About 700 billion was to go for capital expenditure in terms of infrastructure and all that. Then about 400 billion was to go to the devolved government. And actually now that we owe the national government, the devolved or the county government a sum of about 125 billion. The national government is in contravention with the Constitution. Because the Constitution says in the event that the national government is not able to get the revenue that it had anticipated or envisioned in the budget, then the kitty that is supposed to go to the county government should not be compromised, should be paid. Because national county governments, they are recipients. They are not the ones who are controlling the collection of revenue.
How practical is that, Dr. You've just said that yes, it's enshrined in the Constitution. You know that's 15% of also what's gotten that's supposed to be going to the counties. But you've just said that in the event the national government is not able to raise that, they still have to adhere to what the law says. But isn't that conflicting? Because if you can't be able to raise X, how am I sending it to you? How then do you do that? Because that has been the cry of national government. There's a cash crunch in government. They haven't been able to raise enough as they need to, much as career, or just the past few weeks they did say that they are reaching their targets, but over time we've heard that there's a bit of that crunch, and so that's why there's been later delayed disbursements in the counties.
You know that is low, and once we enter into a contract and we say, maybe you have sold me your car, and I promise that I will be paying you 100,000 per month because you have sold to me on credit. That's a contract, and it is supported by law. So a contract is a contract. The law requires the government to do that because, and the problem is like now, for instance, right now, the BPS, the budget policy statement for the budget policy statement for the budget which is coming to be read in June this year is anticipating that we will collect 2.8 trillion shillings in terms of taxes. But right now, we are struggling even with 2.1 trillion, because as at last month, 30th of March this year, we had collected about 1.4 trillion out of the expected 2.1 trillion. So that means we have about 700 billion to collect within a period of 3 months, which is almost impossible. So right now, next 2.1 has been very difficult to attain. What about the one that we are putting for next year at a 2.8?
We'll come to that, because again, there's been a lot of question with regards to expanding the tax brackets and all that. So maybe we'll see how that might aid in this collection of, actually it's 2.7 trillion that the president did say. Nonetheless, just talk to me about the mechanisms you can employ as a state, because you're saying something very important, that all these things are planned for, and you've really also enumerated for us the figures as to how it has been, even when you look at the 2022-2023 financial year. But we are still here in this quagmire whereby it gets to that point of repayment, it gets to that point of payment, and we are conflicted. We are actually choosing, should I do X or Y? Yet we plan. And if we do not do that planning properly, then in September, where we found ourselves in April, this year might just be the same kind of circumstance, because you need to repay again one of those debts that we got. So what mechanisms can perhaps the state employ? in terms of planning, preparation, and the likes?
Number one is debt restructuring.
Okay.
And debt restructuring is when you go to your lender and you tell him that I had anticipated to repay this loan within 10 years, but because of the prevailing economic situation, I would propose that we double that repayment period from 10 years to 20 years. What that means, if I was paying 1 million per month, I was repaying the debt at a rate of maybe 1 million per month. Then if I double the repayment period, it would mean I will be paying 500,000 per month.
Okay.
So the government can employ such a strategy.
So you get a moratorium?
Not a moratorium, because a moratorium would be like you are being given some grace period before you start paying. This one is just extension of the debt repayment period. The other issue, you can still go and bargain about the interest rates that your lender was charging you. If the lender was charging you 10%, you can go and say, if you continue charging me 10%, I will never be able to repay this loan.
But actually, the president
8%?
has said that debt restructuring is not the route that we will be taking as a country. We will pay our debts. And this is a solution that you're giving to the kind of problem that we are having.
Because for me, I'm a strong believer that desperate time calls for desperate measures.
Okay.
Because I'm very concerned that if we ever default on the loans, then all these options that we think we have, they will just disappear.
All right.
Even the issue of bargaining or negotiating for debt restructuring. Like now we are doing debt refinancing, and we are doing it at a very high cost. Usually debt refinancing, the way it should be done is when probably had obtained a mortgage of about 10 million from a certain bank, let's say Bank A, at an interest rate of 14%. Myself, maybe a mortgage of 10 million at an interest rate of 14%. So at some point after maybe 1 year or 2 years, the interest rate goes down. So I go to Bank B, which is willing to give me a loan at an interest rate of 12%. Okay. So I say, tell Bank B, buy for me that loan that I have with Bank A. Clear, because that is a very more it's a more expensive loan that I'm paying 14%, and I be left with you to be paying you 12%. So that's the concept of debt refinancing. Okay. But now we are doing debt refinancing the other way around. You see, probably we are at 12% interest rate per year. Yes. But because we need to borrow to repay this debt that is maturing, we are reborrowing at a higher rate, 15%.
And because we have no choice, ideally.
Because we have no choice. And we are, every other time, we are nearing the red line. We are nearing the red line. So the more we think that we have options, which we don't have, and lose the opportunity to borrow some more before we lose that opportunity.
Yes. I want us to move to the next matter of taxation, but before then, now that you said we are nearing the red line, and I'm thinking in my head that we are currently standing at 9.2 trillion in terms of our debt. Yes. And if whatever is being discussed as far as getting another Eurobond is concerned, and if the figure indeed is as supposed to be the 270 billion, which is supposed to be paid next year, June, is anything to go by, that simply means that it will increase our debt to 10.4 trillion. Yes. From what we know is that our debt needs not exceed 55% of our GDP, which currently stands at 13 trillion. So when you look at these figures and where we stand, are we nearing towards what is the threshold, and what does this mean for our economy?
Wonderful. Actually, as it is already past that figure. Okay. We are at around 60%.
Oh, so you're past 55% already?
Yeah, we are past 55%. We are about 60%. So it has already surpassed that. And it is
so we are literally on the red, as you said?
No, not really. No, not really, because there are countries that even have we call it debt to GDP ratio that is above 100%. People who have borrowed more than their GDP. Okay. A country like Japan, we have even US. But now the main concern or the main determinant whether the country is in red when it comes to the issue of whether they have the ability to repay the loan is another ratio called the tax revenue versus GDP. Okay. Tax revenue versus GDP.
Okay.
The current tax revenue says, like now, the amount that we collected or we were anticipating to collect this current year, that is June 2022 to June 2023, is 2.2 trillion. So if you say 2.2 trillion divided by GDP, which is 13 trillion, we get about 14%.
Okay.
And some countries like South Africa, they are at 23%.
So they've surpassed.
They are collecting, they are doing better in terms of revenue collection than we are. So if we are able to move from 2.2 trillion and collect maybe 5 trillion, because that basically would mean we have come from 14% to about 25%, then we would have a better ability to repay our loans. So the issue, and that's why the president keeps pushing for people to pay taxes.
Okay.
So that once we are able to collect more revenue, then our ability to repay the debt gets better. So it's not the issue of GDP versus the debt or debt versus the GDP. It is actually the issue of revenue collection, our ability to collect revenue vis-a-vis our GDP.
So that simply means you can borrow, but if your ability to collect revenue is good enough,
yes,
it's equally okay.
It's equally okay.
That's what you're saying.
Yes, because Doreen, we can even have a budget. We can even have a GDP of 20 trillion.
Yeah.
GDP of 20 trillion, but we are collecting zero taxes. For instance, even if the GDP goes how high and the amount of taxes we are collecting is still low, then we will not have the ability to borrow, because we don't borrow on the strength of the GDP. We borrow on the strength of the revenue that we're able to collect.
Okay, I hear you. I want us to take a very quick breather, Daktari. When we come back now, we look at that aspect of collection and the whole issue of taxes. This regime has been very, very vocal about expanding the tax bracket. We've even at some point talked about M-Pesa transactions, a form of tax bracket. SMEs, for instance, and onboarding 18 years and above into that tax bracket. So how will this help in that collection of taxes? Like at the same time, also talked about increasing our revenue collection from 2.1 to 2.7, as we say, and the next 4 years again increasing, doubling that to about 4 trillion. So discuss that, and again also, as far as the economy is concerned, cost of living, we can never miss to talk about that as well. We talk about all that after this breather. Clearly, as you've had quite a lot to discuss after this break as far as economy, financing, taxation is concerned. So stay with us.